Hi everyone, Oleg Koch here with your annual mortgage rate and housing update, where we're going to be talking about what just happened with interest rates, what's the prediction for rates in the next year or two. We're talking about housing, what happened in housing with the last year, demand, trends, all of that. And we're going to be talking about future housing markets and the future predictions and how rates are going to impact that. We're also going to be talking about buyer demand and just some of the pre-election, post-election housing trends and historically what we could expect to happen. So first I want to talk about our last video and our rate predictions a year ago when we released a video in August of 2023. At that point, rates had just went above 7%. And we talked about how we believe that rates were going to go up past the mid sevens up into the upper sevens through that year before coming down into the beginning of 2024 and kind of entering this mid 6% range. And I talked about how rates were going to kind of hover in that mid 6% range up until summer, and how towards the end of summer rates were going to come down into the fives. I'd mentioned in a video I didn't know if it were going to be high fives, low fives, but we talked about how they were going to come down end of the summer into the fives. Now let's look at what happened in after our rate prediction video. You see here rates actually after we dropped that video went up, and they continued going up just like we said they would. They hit a high in October, and through November and December they stayed in the sevens, and next year 2024, this year, we saw them hit that mid six range, and they kind of stayed in that mid six range and upper six range. And if you look at us being at the end of summer, we just locked in some clients in the high fives that are purchasing a home. And so almost exactly what we predicted rates would be in our last video. So what's currently happening with interest rates in the overall market? When you look at the Fed and what they just did, we just had the first rate cut in the last 4 years. The last time they cut was in 2020. Now, why did they cut rates now and what triggered it? So if you remember in the last video, we talked about the biggest driving force of why rates were going up was inflation, and the Fed having to raise rates in order to slow inflation down. If you look at this inflation chart right here, you'll see that inflation was pretty much almost at the 9% mark July of 2022, and since then it has come down with all the cuts that have been happening into a point where right now right before the cut, the last inflation reading was right around 2.5%. Now the Fed is targeting a 2% inflation rate, and the fact that we're at 2.5% right now and how much we've been trending down on inflation, they believe that overall inflation is really behind them. Now, as far as future rate cuts, what are predicted? There's 2 more meetings this year, November and December of this year, and the current projections per the Fed, is they're going to cut 2 more times, a 0.25% cut in November, a 0.25% cut in December, which means another 0.5% off the federal funds rate. Now, in 2025, they're projecting to cut the federal funds rate by another 1%. And then in 2026, they're projecting to cut the federal funds rate by another 0.5%. So ultimately, 2% more is what they're planning on cutting per the Fed over the next 2.5 years. So what does that mean to interest rates? So if you look at between now and the end of the year, we believe that rates are going to come down another roughly about 0.5%, and they're going to come down and kind of be in that mid 5, maybe even possibly a low 5% range. Now, moving forward into 2025, it all just depends on how quickly they cut rates by 1% that they're predicting to cut. Are they going to cut them in the beginning of the year? Are they going to wait towards the end of the year? That's still to be determined depending on the economic reports that come out about further inflation and at the same time to the job market. However, overall, we believe that rates are going to stay kind of in that low 5 range through the first part of the year and start hitting the high 4s through the second half of the year. Now, going into 2026, which is really far out, we believe that rates are going to continue coming down into the mid fours and potentially, depending again on what's happening with the different reports and the Fed and whether they do exactly what they said they're going to do or change course, but we believe we might even see potentially the high threes again. So overall, the fact of the matter is we've now entered in a new, you could say, Fed cycle. And that's actually something that Mr. Powell said a couple weeks ago. He said the Fed's ready for a policy change, and he's ready to pretty much start, going down on rates. And so this new cycle has started. Now, keep in mind that as rates come down, just like when they go up, they don't go straight down or straight up. Typically, you're going to see kind of a trend where you're going to see lower lows on the way down and lower highs on the way down. But there's definitely going to be bumps along the way, which is totally normal. Now, let's talk about all the people that have purchased a home in the last 2 years and when is the right time to refinance and how do you time that? We've been getting a ton of calls recently for people to say, hey, is this a good time? Should we refinance now? Should we wait? And I think it all depends on where you purchased. And so if you look at where rates have been over the last few years, you see there's moments they've been in the low sixes. You see there's moments they were in the high sevens. And so for those of you that purchased and you have a rate above 7%, specifically those that have a rate 7.5 or higher, it might be a good time for you to refinance this fall. It might be a good time for you to refinance in November and December once those other 2 rate cuts occur. Now, for those of you that have purchased earlier this year, maybe a few months ago or prior to rates going into the low sevens or mid sevens, it might make more sense to wait until next summer. If you're right now in the mid sixes or low sixes, it absolutely doesn't make sense to pull the trigger too early, as you don't want to refinance a few times on the way down and incur extra costs every time you refinance. It might make sense to wait until next summer or potentially towards the end of next year. Ultimately, at the end of the day, at this current moment, it seems the more you wait from a standpoint of refinancing, the better rate you're going to get. So there you have it. As far as refinancing, it all just depends on you and your situation. If you have questions, you want us to analyze it for you, reach out to us. We'll let you know if this is a good time for you or if you should wait further. So let's talk about housing and overall house prices and so on. If you look at the average home price in America, currently right now it's $434,000. Now, overall, home prices have increased by 3.2% year over year. Now, a lot of people are wondering, how is that possible? What about this market? And I totally understand. There's certain markets that have increased a little bit more. There's some that have not increased or some have gone down a little bit, which is totally understandable. But overall, the average housing, home prices are higher today than they were a year ago. Now, with that said, what's super interesting that I think everybody should know is housing sentiment. So check this out. Housing sentiment overall right now is almost at an all-time low. When you look at housing sentiment, you look at, this is pretty much a chart that shows housing conditions and how people feel about housing. You look at right now, this is kind of the point where people have their opinion on buying a home right now is the lowest it's ever been from a standpoint of, is this a good time to buy? What's interesting to know about that is the fact that even though that's the case, home prices still went up 3.4% over the last year. That's pretty wild if you think about how resilient home prices have been, even though the demand for housing and the feeling that people have towards buying a home hasn't been the greatest. Now let's talk about housing supply, which is interesting as well. So if you look at housing supply from last year, we were at some of the lowest points. Prior to that, the lower point was in 2022, but really overall, very low housing supply last year when we did this video. And you see that housing supply definitely went up this year. It is a lot higher than it was. At the same time, too, it wasn't as drastic as people might think. Now, why has the housing supply gone up? couple different reasons. One is fear of the election. A lot of people wanting to sell the home because they think something bad might happen after the elections. At the same time, too, it's also with rates coming down and a lot of talks about rates coming down over the next few years, and that always brings more sellers to the market as well, as the market becomes more and more predictable versus a few years ago. If you think about rates shooting up for the first time and talks about rates continuing to go up, where at that point there were some talks about rates getting into the 9s and even into the 10s, which again causes a lot of fear for people that why would I sell a home and then maybe end up not being able to afford the next one. Now let's talk about housing demand, which is another interesting component to the housing market. So one chart that I want to show you, you see that typically you'll always see housing demand go up in the spring. This is kind of that spring buyer's market where there's a lot of bidding wars and everything. And then towards the summer, it always typically cools off and it cools down through the holidays. And then again, it heats up in the spring. And then again, you got that buyer's rush spring market. And then it slows down again. We're seeing the same pattern this year as well. But overall, we are seeing a little less demand this year. And then the question is, why are we seeing less demand? So one thing that I want to bring up that's very interesting that a lot of people don't realize is in an election year, historically, even though you have the seasonal slowdown of demand, in addition to that, you also have the slowdown in demand due to the elections. In fact, if you look at this chart here, you will see that the impact of a presidential election on housing, when typically you'll see housing demand slow down by about 9.8% in a typical seasonal drop, which is the average, you see that in an election year, it's about 15%. So it's about 15% or 50% more than your average. And so part of the reason why we're seeing less housing demand this year as compared to last year is because we're in an election year. Well, why does that matter? It matters because whether you're a Democrat or a Republican, you'll notice that most people, everybody has the fear if the other party gets elected, it's going to get bad, it's going to get ugly. So there's a lot more fear in the market with the election. And fear leads to people pausing, leads to people freezing, leads to people not taking action. And so a lot of people are just waited out to see what happens with the election, with the results, and then they proceed onwards. And so that is what we're seeing this year. And so if you're a seller right now and you're wondering, why are people not coming to my house? And especially if you're a seller that listed a little bit on the higher side, because there's still a ton of bidding wars out there. I mean, we're dealing with them all the time with a lot of our buyers where there's still tons of bidding wars. But if your house is sitting, just know, or if you're an agent and you're working an open house and not many people are showing up, just know this is normal. And when I say normal, I mean look at the history. You'll see that this is a trend that happens almost every election. I've been doing this for, it's going to be 20 years now, and over the last 4 elections, we've all noticed this. And again, the charts just prove that this is just something that is common, and this does not mean that the housing market is crashing right now because your home is not getting views. So being that we're in an election year, we just had the first rate cut in the last 4 years. We know that rates are going to keep going down over the next few years per the Fed. What happens next with housing? Let's first talk about the election and how does that impact housing. If you look at home sales, here's a good chart to just look at. Home sales went up 9 out of the last 11 elections. This means the volume of sales have gone up. And in fact, if you look at the 9 out of the last 11, the ones that it did not go up were back in the 80s. So you could say there's a very, very strong indicator that we're going to have a lot more sales after the elections, a lot more volume of people buying and selling. Now, in addition to that, let's look at this chart, which is going to talk about home prices. You could see home prices went up 7 out of the last 8 elections, which again, if you look at the 1 year they didn't go up, this is 2008. For those of you that remember what happened in 2008, that is the time that housing really crashed hard, and we went into a recession and all that. That was the only one time after the presidential election that home prices did not go up. So if you look at that and you look at that chart, you would pretty much say that per this chart, there's a very good chance that home prices are going to go up again. Now let's take the elections and just put them aside. What are the outcomes that we could potentially see from the Fed and what they're doing with rate cuts and what they're going to do with rate cuts and the potential impact on house prices? Now, there's a lot of different, you could say, theories. There's a lot of doom and gloom out there that everything's going to crash and all that. And we've seen that doom and gloom since 2008. In fact, since 2012, I've had somebody tell me that the whole housing market's going to crash really hard, and every which reason why. And so with that said, I want to talk about the three possible outcomes, extreme and non-extreme, that could happen as a result of the new Fed policy and the rate cuts. So number one, you have hyperinflation. Why would we have hyperinflation? Hyperinflation would occur if the Fed cuts rates too fast. And if they cut rates too fast and the market is very strong, the economy and the market's too strong, you're going to see inflation go up even more, which means because people are going to have an increased buying power, they're going to spend more. They're going to bid home prices up for more. We kind of have a shortage in homes, and we have all these buyers that have been sitting on the sidelines. If they all enter in the market, rates come down too fast. And when we saw homes being bid up $1 million over ask back in 2022, we talked about that in our last video. That could become a norm. Now, that is an extreme case, and if the Fed were to do that, it could ultimately lead to a housing collapse. But before the housing collapse and housing crash, we would see a massive surge in home prices. So that's the first situation. Now, the second scenario that we could see is the opposite. We could go into a recession, potentially a deep recession. Now, why would this happen? It would happen because the Fed waited too long to cut rates, which there have been a lot of different, you could say, investors, analysts, all that have said the Fed waited too long, damage is done, we just haven't seen the damage. And because the damage is done, we're going to see a scenario where we're going to go into a deep recession. Deep recession meaning a lot of jobs getting cut. Because here's the fact, if you don't have a job, or if your job is very not stable, or your income continues to go down, rates won't save it. It doesn't matter. You're not going to buy a home. So if we see that happen, can we see rates, the rate of homes prices go down? Yes, that is a possibility where if we enter in a recession, we are going to definitely see it impact house prices. Now, in turn, we would see the Fed jump in and probably lower rates more aggressively. But nonetheless, again, if it goes into a deep recession where it's just rough out there and people are just not making money, it really won't matter. That is the second potential, you could say, massive impact that we could see on the housing market if that were to happen. Now, the third possibility and the most likely outcome, and this is what the Fed's been trying to achieve, is if you've been following this, they call it the soft landing, where essentially the Fed cut perfectly in time, just right, did not slow the economy down too much, kept the job market just strong enough, but yet slowed it down just enough where demand has gone down, and we've achieved a landing where essentially we smoothly transition into, you could say, the next market. And that is the most likely outcome, where a lot of different analysts are predicting that the Fed's going to have a soft landing or even no landing, where we're just going to keep going as if nothing happened and everything is good. If that happens, then we're going to see most likely these lower rates coming down, push houses prices higher. Is it going to be an extreme? No, but we will see house prices continue to go higher. Why? Because people are going to add to their buying power, and these recent, you could say, new norms and monthly payments are going to be what people are going to be using to just buy for a higher purchase price, and so on. And so if that all happens and we achieve that soft landing, what we're going to see is next year you're going to see way more demand, from buyers, because at the end of the day, when you look at 80% of people thinking it's a bad time to buy right now, eventually that's going to shift. And even if you think 50% or 60 or 70 think it's a good time to buy, all of a sudden you have this pool of buyers that end up becoming homeowners, which will put pressure on home prices to go up. Now, there's a lot of talks about people selling their home because rates are lower and that have been holding off, and you're going to have way more inventory. But keep in mind, every seller becomes a buyer, and so at the end of the day, most likely the overage of supply that we're supposed to receive is only going to balance the market up, while we still will have pressure on home prices to go up. So aside from rates, another reason why we're going to see that pool of buyers come over and think it's a good time to buy is due to rents and how expensive rents have gotten. In fact, if you look at a chart here, you'll see that since 2012, rents have gone up significantly. In some areas, they've almost doubled. And so all these buyers are sitting on the sidelines that are renters right now. They've been paying higher rents than ever, and a lot of them they're getting that renter fatigue where they're just can't wait to get back into the market, can't wait for their buying power to allow them to buy it again, can't wait for rates to allow them to afford the monthly payment again. And because of that, we're going to see again those buyers be pushed into the market. So in 2025 and 2026, the projections are we're going to see more home sales than we've seen in a very, very long time. So there you have it. That is the overall current rate and housing market. So if you are somebody that is watching this video and you haven't purchased a home and you're wondering, when do I buy? What's going to be the right time for me? The one thing that I'll say is, obviously you have to first, number one, be financially ready to buy. That's number one. So if you're not financially ready to buy, the real plan should be, how do I get myself financially ready to buy? Where do I need to spend my time, energy, money, effort into growing my business or increasing my income, and so on. Now, if you are financially ready to buy, in reality, based on the fact that in a few months here, we're going to have a new president. Both potential candidates have big plans for housing. They both want to push housing. You see the Fed, you see rates coming down, again, pushing housing. Everything is looking like the housing market's going to get healthier and healthier, which really drives home prices up. So if you're that person that's ready today, in reality, there's a ton of buyers right now that they're buying right now before the election because they want to get in before the spring market. They want to get in before things heat up way too much. And those buyers that do purchase today, their plan is to refinance in the future, which as of right now, they could be refinancing as soon as summertime. So based on that data, you got to draw your own conclusions on what you feel like is going to happen in the market. If you're looking to buy or refinance, we'd love to help you with your next deal. At the same time, too, we'd love to hear from you and what you think is going to happen. Feel free to comment below. And for those of you that are watching that are my past clients and current clients, and for everybody that sent us clients, I want to thank you for that. We look forward to working with you, looking forward to working with you on your next deal. We want to thank you, and we hope you have a good one. Until next time.